If you own real estate or invest in alternative assets, you've probably experienced this. You sit down with a traditional financial advisor and the conversation always finds its way back to stocks and bonds. Your rental properties, private deals, or partnerships are either briefly acknowledged or avoided altogether. That's not because real estate isn't important, because many advisors don't understand it, or they aren't compensated to work with it. Before we go any further, I'm Mark Schreiber, CPA, Senior Partner at E3 Wealth. More than 30 years of accounting and tax experience, I help families and business owners make more confident decisions around investments, taxes, and retirement planning. Now let's get started. For many successful investors, real estate isn't a side asset. It is the portfolio. It's where their cash flow comes from. It's where tax leverage exists. It's where long-term wealth is actually built. But most financial advice is still designed for people whose wealth lives inside brokerage accounts. And when your assets don't fit that mold, advice breaks down. At E3, we see this pattern constantly. Clients come to us with meaningful wealth in rental properties, commercial real estate, private investments, business ownership. But each piece is managed in isolation. Their advisors handles market investments. Their CPA focuses on compliance. Their real estate strategy exists in a silo. That's not coordination, that's fragmentation. And fragmentation creates blind spots, especially around taxes, cash flow, and long-term planning. Real estate doesn't fit neatly into the scaled advisory model. You can't just plug it into a pie chart. It requires entity structuring, cash flow planning, tax strategy, liquidity and exit planning. And most importantly, it requires professionals willing to engage with complexity. If an asset doesn't sit on a platform or generate a management fee, it often gets ignored. That's not because it's bad, but because it doesn't fit the model. At E3, real estate and alternative assets aren't treated as side notes. They're integrated into your total wealth strategy. We look at how real estate cash flow supports your income and lifestyle, how depreciation, cost segregation, and structure affect your taxes, how alternative assets align with your long-term goals, how everything works together, not in isolation. The question isn't whether real estate belongs in your plan. It's whether what you already own is working together. This approach doesn't mean real estate is always the answer, and it doesn't mean alternatives are automatically better. It means your wealth shouldn't be compartmentalized. When real estate is a meaningful part of your financial life, it deserves intentional planning, not avoidance. This isn't for investors who want a one-size-fits-all portfolio, and it's not for people looking for someone to only talk about markets. It's for people whose wealth lives beyond traditional assets and want a team that can help integrate everything with purpose. If your real estate and alternative assets are being treated as off to the side and you don't have a holistic plan, you have disconnected parts. If you want help integrating everything into a coordinated wealth and tax strategy, you can schedule a conversation with our team below. We help investors think differently about how real wealth is actually built and managed. Thank you.